Welcome to this episode of the Simply Financial Podcast. This is your host, Christopher Calandra, and I want to increase your financial IQ with today's episode, which I would describe as a bit whimsical. I want to share with you the origins of two terms that are very popular and mainstream, but I want to talk about where they came from. It's bulls and bears. A bull market, as you probably know, is associated with an upward moving market. It's usually associated with a market that has confidence, optimism, and aggressive buying. A bear market is the opposite. A bear market is associated with a downward moving market, markets that are usually associated with pessimism, caution, and selling pressure. A bear market is usually defined as a decline of 20% or more from recent highs. And a bull market is usually associated with a 20% rise from recent lows, and that is sustained over time. So simply put, the origin of bull is the following. A bull, when it attacks, thrusts its horns upward, and that is associated, I keep using that term, with a bull market, and it's become mainstream terminology. Almost everyone knows what a bull market is. A bull market probably lasts on average about 5 years, and as I said, it's a 20% rise from a recent low that's sustained over time. The last full cycle bull market that we had was actually much shorter. We had a bull market beginning during COVID. There was a bear market during COVID that gave way to a new bull market that actually ended in 2022. It only lasted about 21 months. It was a sharp, strong upward bull market, but relatively short based on historical averages. So that's where the term bull comes from, the animal thrusting its horns upward when it's attacking. So let's cover bear market now. When attacking, a bear swipes its paws downward. So that's why we have bear markets. If you go back further in time, in the 1800s, in England, there was a bearskin jobbers, I think was the term, and that was associated with stock speculators. And that term came from even farther in the past, and it was a link to an adage about not selling a bear skin before you actually have the bear caught or hunted. So these have strong historical links, but the bull and the bear terminology really became mainstream and commonplace in the 19th century in the United States. Bear markets occur roughly every 3 to 7 years on average, as we've already talked about. 20% drops. I'm recording this in 2025. The NASDAQ, that major market index, did get to bear market territory this year. Not sure if we're in a new bull market with that index yet. We'll have to wait and see. But that's a little playfulness, whimsical explanation of the origins of bull market, bear market terminology. I appreciate you listening to this somewhat silly episode of the Simply Financial Podcast. I'll be back with you on the next episode very soon. In the meantime, subscribe to the show if you haven't done so already. I would really appreciate that. And check out the work we do by going to Osaic Wealth Management. You could find out more about me, the team, the work we do to help our clients achieve their financial goals and win with money. Again, thank you. Have a great day.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues, or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.